Let's see, and we are live. Let me turn on my volume real quick. Make sure that I'm actually good when it comes down to that. This is Travis Witherspoon from Carter Cow Capital, helping you fight for your financial freedom in the Forex market. This is our Fibonacci Fundamentals Masterclass that we're going to end up having a webinar on, and I'm very excited to be able to talk to each and every one of you that are just logging in and being able to get into the video. I'm going to wait for a few minutes, but while we're actually doing that, please make sure that you end up clicking into the chat box. Make sure that you end up typing in your name and saying hello and telling me if my sound is good. Just basically telling me if you can be able to hear me. And also, I end up placing in one question on the screen as we speak right now. It is, what is your why for actually being here? Everybody has a why for being able to, one, try to figure out a way to be able to start trading or anything else like that. What's your why for being here today? Travis, got you. I can see your name right there. Glad to have you in. Answer that first question for me. What's your why for being here? Now, what I mean by that is this. Obviously, when you get into trading or when you're learning about this trading in general, everybody has their own reasons for being able to do it. Maybe it might be passive income. Maybe it might be generational wealth. Maybe it might be just trying to make that extra $200 to $300 a month that you can be able to get in trading. Hey, little man. But yeah, that's that's my might as well show him real quick. This is my son Miles. Say hey. Say hey. Say hey. Hey. Okay. Just give me 1 second. Let's see. Take my phone. Go on the run. Go on the run. But yeah, we'll get ready to get started in 1 minute, and then after that, we'll go ahead and move on from there. Just give me 1 second.
Happy. Happy.
Yes.
I love you. Happy.
Okay, great. So we'll go ahead and get started from here. So you've seen 1/2 of what my why was. I'm gonna get ready to type down what my why actually is, and then after that, we'll go ahead and move on from there. My why is this. So, just to give you a little bit of backstory about myself, and for the people that are in the room that don't know who I am, my name is Travis Witherspoon. I am, matter of fact, let's move on. Let's stop real quick before we actually end up jumping into that. Let's go ahead and go through the disclaimer real quick. Basically, what this means is all the stuff that we're going to end up talking about for today is going to end up being educational purposes only. I am not a CPA, which means that I do not tell you what to do for buying or selling in overall trading. What I end up doing is basically teaching you and giving you educational packages so you can be able to learn and be able to thrive throughout the Forex market. But you did that on your own merit and making your own decisions. Past performance is not indicative of future results, but what we try to do here is to try to get you to a point where you can be able to substantially be able to make profits inside of the Forex market by being able to learn some of the things that we end up teaching. But from there, for those who do not know me, my name is Travis Witherspoon. I am the creator of Pathfinder Auto, and I am the creator of the Precision Entry Point Trading System, and I am a Forex trading specialist. Basically, what that means is I help people get started in their overall trading career, and I help mentor them for their trading. And excuse me, give me 1 more second. Okay, I'm sorry about that. My son is actually woke up through nap time, so just trying to get him situated and everything else. But like what I was saying, what I end up doing is that I end up helping people with their overall journey and being able to get started with forex trading, and from there with our systems and everything else, and being able to monitor what they end up doing throughout the month. We try to get them to where they can be as confident as possible with their overall trading, and then after that, help manage them throughout their overall time. Sorry, I'm out of breath a little bit, but um, what we're going to end up doing is this. Over the course of the next 45 minutes, I'm going to end up showing you one of the systems that we have, which is the Fibonacci Fundamentals Trading, which is basically our foundation system for being able to trading. And it was actually the first style of trading that I actually ended up getting into when I first got started in trading 5 years ago. Going back to the backstory with me, what I ended up doing was I've been a teacher for the last 5 years, but I've actually been in coaching since I was 16 years old. And I had an opportunity to be able to pursue my dreams of being a head football coach in high school football and in middle school football. And I had the opportunity to be a head coach over at the school that I was at previously. And what ended up happening from there was I actually ended up getting let go at that particular point in time. And what they ended up doing was cutting a substantial amount of money that was out of my account, being able to get started from there. So this was right around the time where I just had my first son, Miles, and I recently found out that I was expecting another son, which was Mason Kyle, and from there I was just trying to figure out a way to be able to create some passive income, so I didn't necessarily have to trade my time for money and be able to do a lot of stuff actively for its time. But what I ended up doing was I actually ended up stumbling into a person that actually knew everything about forex trading, and he ended up teaching me the ropes. And basically, from being able to learn from him and being able to learn from other people, I developed my own system based off of that information. But I'm going to start off by talking about this one statement that I'm going to start off with, and this is kind of the baseline for everything that we end up doing for trading. There's no guarantees in trading. The sooner that you accept that, the sooner that you can release your expectations and focus unconditionally on a proven process. Now, what we're going to end up talking about is the Fibonacci sequence and Fibonacci trading in general. And the reason why it's a proven process is because it's based off of 4 separate things. One, there's research-driven analysis that goes along with it. The Fibonacci sequence has been recognized since 1202. Before I even move on, and I'm going to stop right here for a brief second. Send me a message if you understand or if you've ever heard of the Fibonacci sequence before. I'm just going to take a brief second just to kind of gauge the room and see if you understand, see if you know about the Fibonacci sequence. Okay, cool. So what the Fibonacci sequence is this, and I kind of jump into it in one brief second. I'm going to give it a little bit more of a backstory, but the Fibonacci sequence in general is used outside of forex trading, which means that it has been discovered all around the world and it's used in all walks of nature. You look at pine cones, you look at pineapples, you look at the way that music is being played, art, obviously trading. It is very prevalent in the way that it's being created. It's something that is simple and repeatable, which means that Fibonacci trading can be used in any market condition without adjustments. Now, you look at certain indicators, certain styles of trading and stuff like that. If it's in a flat market, then it doesn't perform as well. With Fibonacci trading, because it has been used and because the ratios and everything else have been the same for so long, it makes it very easy to be able to understand what type of adjustment, if you do need to make an adjustment, can be made. And then after that, it's a profit generator. And what that basically means that you will end up finding pinpoint entry and exit areas, which leads to consistent trading. And consistent trading leads to consistent profits. And obviously, we're talking about being able to create passive income. Now, the overall thing in passive income is this. You're trying to be able to do something or be able to learn some type of skill one time and be able to profit over it over and over again based off of that overall skill. Based off of some of the things that we're going to end up talking about today, I'm going to explain how you can be able to do that. So we're going to break down this session into 4 different areas. We're going to talk about the history. We're going to talk about the ratios that go along with it. We're going to talk about retracement and extensions. And then after that, we're going to talk about the trading strategy. And then from there, I'm going to end up having an offer for you for our overall services, what we actually end up doing, and just being able to gauge what you think about it. All right. So everything starts with Leonardo da Pisa da Fibonacci. He was a son of an Italian businessman in the city of Pisa, and he grew up in North Africa with his father, where he was basically a merchant, and he worked with his father by being able to help track their commercial transactions. And they end up primarily working with animals and everything else like that. And what he ended up finding out was that after leaving his rabbits inside of a closet for a month, he ended up finding out that they kept on duplicating based off of being able to mate. And from a month-to-month standpoint, he ended up stumbling into the Fibonacci sequence, which involves the 2 preceding terms of one another to generate the next term. All right. So when I'm talking about the Fibonacci sequence, we start off with these numbers. If you look at it, you have 1 and 1, and then 2. You have 3. You have 5. You have 8, 13, 21. 34, 55, 89, 144, and 233. Now, you look at that, the string will end up continuing into infinity. But let's talk about how this is actually created. 0 plus 1 equals 1. 1 plus 1 equals 2. 1 plus 2 equals 3. 2 plus 3 equals 5. 3 plus 5 equals 8. 8 plus 5 equals 13, and so on and so forth. Type in a Y or a yes if that makes sense before we actually end up moving on. Okay, good. So based off of them numbers, we actually could be able to use common ratios with those numbers, and it's based solely off the Fibonacci sequence. Now, the ratios are important because they provide potential U-turn areas and forecast what a price could potentially go. Now, the most common ratios that are used is the 23.6, the 38.2, the 61.8, and the 78.6. These represent how much a prior move in the price has been corrected or has been retraced within a move. Now, going back to what I ended up saying before with the original Fibonacci sequence, we actually end up finding these numbers by being able to divide the previous number in the sequence to be able to find that. And the first one that starts off with it is the 61.8% or the golden ratio. Now, the golden ratio is a special number that equals to 1.618, and the inverse of that is 0.618, but you can find this by dividing each number in the Fibonacci sequence by the previous number in the previous sequence. So let's take a look at a couple of examples in that. If you look at, let's start off with 144 divided by 89. 144 divided by 89, you end up getting 1.6179. If you round that up, you get to 1.618. Do the same thing with 233 divided by 144, 1.618. 377 divided by 233, 1.618. 610 divided by 377, 1.618. And you keep on going all the way over to the right-hand side, you can see the same thing. So essentially what this is basically saying is, based off of that sequence and based off of the previous number, if you end up using that, you will always end up finding that number. That's why it's so prevalent. That's why for traders, that percentage is very important for us when it comes down to retracements. Now, another trade or another number that's very important to us when we're coming down to trade, and it's the 78.6, and this is known as the value trade. And The 78.6 ratio is derived by multiplying the golden ratio by itself. You look at it, 0.618 times 0.618, you end up getting 0.786 or 78% of its overall move. Now, the reason why this is called the value is because when you're trading the 78.6 level, it provides a low risk to high reward probability trade. Now, I want people to think about this. The overall purpose of trading in general, whether if it's stocks, bonds, futures, cryptocurrency, anything else like that, the biggest thing that you're trying to do is trying to minimize your overall risk by risking a very low amount to be able to make a high amount based off of that. So to give you an example, if you're going to risk $100 on a trade, you want to be able to make more than $100. Now, you can be able to make $300 based off of the $100 that you end up having. Then that means that your risk to reward ratio in that case will end up being a 1 to 3. So essentially what happens is this. It basically ends up saying that you don't have to win as many trades as you think that you should in order to still be able to create a profit. So by being able to find trades within the 61.8 level or the 78.6 level gives you quality, low risk to high reward probability trades over and over again. Type in a Y or a yes if that makes sense. So moving on, the next ratio is the 38.2 ratio. Now this is derived by dividing the number of the Fibonacci series to 2 places to the right from that series. Now if you look at it, to give you an example, you look at 55 divided by 144, you end up getting 0.318 or 0.319, 3819, sorry. If you look at 89 divided by 233, you get 0.3819 as well. Now, the reason why this is called the safe haven is because when you're trading, if you're trading to the 38% or 38.2%, and you see that the market has retraced to that level, it gives you a high probability trade during retracements, and it gives you a warning area if it has not been fulfilled, which means that it allows you to be able to see if the market is being very healthy in its movements or not being very healthy in its movements. So anything that goes beyond the 38.2 retracement is healthy. So if you're looking at the 23.6%, then that means that this is based off of the market being derived by dividing the Fibonacci sequence 3 places to the right. And if the market only retraces to the 23.6% and it does not go beyond the 38.2%, then that means that the market is in an unhealthy movement, which means that it's going to end up facing resistance before actually hitting its overall extension. Now, to give you an example of what this looks like, if you look at 8 divided by 34, you get 0.2352. If you divide 89 by 33, you end up getting 0.2360. Now, before we move on to retracements and extensions, if you have any questions right now, this would be a great time to be able to, I'm going to pause for a second and I'm just going to see what you type. If you have any questions, let's go ahead and answer them real quick before we move on to retracements and extensions. Okay, so if there's no questions, then we're going to go ahead and move on to retracements and extensions. Now, by using those ratios and going back to those ratios in general, what we end up, what was figured out was that Fibonacci retracements levels apply percentages of a pullback when the market has went to support and resistance of the AB boundary. And the extension level forecasts what a price will project to after breaking the AB boundary, and these levels include the 118%, the 127%, and the 161.8%. So if you're going back to it, this overall trading, think of it as ABCDs, meaning that from one movement to A to B, you end up getting a high price, and after that, the market will end up pulling back and then going to an overall extension. But from that extension, based off of wherever it retraced to, you can be able to safely understand and forecast what a D extension is going to end up being. To give you an example of that, I'm going to show you two different charts. Now, one of them is from Smart Trader, which is an actual platform chart that is used for charting software, and it has a certain style of Fibonacci ratios. And then after that, there's TradingView that does the same, but we have to use the numbers in a negative manner so you can be able to get the same type of result. But basically what happens is this. Each retracement level has a high probability extension that forecasts where the D extension is going to end up being completed. So simply put, if I end up saying the green retracement will end up extending to the green extension, the gold retracement will end up extending to the gold extension, and the red retracement will extend to the red extension. Does that make sense? Type in a Y, yes, if that makes sense. I'm just gonna look at what you end up saying in this, and then after that, I'm just gonna keep on going. So essentially, what happens is this: you're looking at either the 23.6%, the 38.2, the 0.50, or the 0.618. All of these retracements extend out to the 1.618, or 161% of its overall move. If the market ends up retracing to the 78.6, or the value trade within that position, then it extends up to the 127%. And if it has a deep retracement, or the 86%, it basically extends out, in that case, to the 118%. So let's take a look at an example of what I mean by the ABCD trend, and what do I actually mean by that. Okay, so if we're looking at this, we can say this is an uptrend where you end up having a higher high and a higher low. So that means that in this case, the market end up going from a low price, meaning that people that was buying it end up finding value. They end up finding that at a very low price. They end up buying it at that point, and then after that, sold it at a very high price. From this high price, what happened was a lot of people end up taking profit. From a lot of people taking profit, the market end up retracing down, creating a B to C type of boundary. From that position, the market ended up making a new high after breaking this B boundary and then extending out to a new level. Now, let's take a look at that from a downtrend perspective. If you're looking at that, the only difference between a uptrend and a downtrend is what happens between a and a B type movement. So in a to B type movement, then that means that the price end up dropping. From that price end up dropping, the market end up retracing back up, which means that the people that end up selling basically turned their profit, or turned it into buys to be able to create profit. All right. From there, based off of the movement of being able to buy, the market end up retracing to a high enough level to where sellers end up finding it attractive to be able to sell it again and creating a new low. Now, understand this. When you're looking at an ABCD swing, as long as the market does not break the A, then that means that there's a high probability that the market is going to end up moving in the direction of the first move. All right, so to give you an example, we're looking at this from A to B. When the market end up retracing down, and you look at the C where it end up U-turning. If it did not U-turn, as long as it did not U-turn right where the A was, then that means that there's a high probability that it's going to end up breaking that B boundary and breaking to a new low. Type in a Y, yes, if that makes sense.
Dad! Dad! Dad!
Okay, so let's go through an example of what I mean by that. Let's take a look at this uptrend example from here. So what happened is the market ended up rallying from 71.56, or this low price right where the A was, and then after that it ended up pushing the price ended up pushing up to 77.46. From this, it created an AB boundary, which means that this was your support or the lowest price it could go through within the boundary, and that was your resistance or the highest price that it can be broken from that move. From there, the market ended up retracing down. And if you look at the levels, the market ended up retracing to the green level at this point, or 61.8% of its overall move from here, creating a fractal low, which was at 73.82. From here, what you end up doing was this. If you end up getting into this price at, let's say, at 73.82, or had a pending buy at that order, based off of just the Fibonacci ratios, you can almost assume that the market was going to end up moving up to the 1.618, or in this case, a negative 0.618, because this was a screenshot from TradingView. So from there, based off of what a C was in the market, you end up projecting that the D extension was going to end up being at that position. And then after that, you can be able to place your stop below the lowest low within that move, and then after that, just be patient and allow the market to be able to move its own way. Now, if you notice, the market ended up hitting the 1.618 with this long wick that ended up happening right here. Now, what that actually meant was this. The reason why that wick ended up happening was that people were ready to get out at that price and get out at profit within that level, which means that there are so many people that are actually using the Fibonacci sequence so much, it can be so precise in the actual position of where the market is going to end up getting out from there. So what this allows you to do is to be able to get out before people are actually getting out at that overall price, or being able to catch it at a pinpoint level where to be able to get out. And as soon as that end up happening, that D extension end up completing, then you can be able to see that the market end up retracing again and starting to create another lower low within that position to create the sequence again for its ABs. Now, let's take a look at another example in a downtrend. The market ended up dropping from 80.51 to 79.66, creating the AB boundaries from there. Now, the market ended up retracing up to the gold level, and I'm getting ready to test you real quick. Now, if the market ends up retracing up to the gold level at the 786, what percentage is it supposed to retrace? Is it supposed to extend to? Now, if you use the negative number, then that's fine. If you use the number that it's actually supposed to be, then that's fine. But I just want to test you for a second. I'm going to pause for one quick second. I want to see what you think the answer is. If you end up saying the 127 position or a negative 382, then you were correct. What ended up happening with this was, because it ended up going to the 786 or the value trade, you end up going from the gold level to the gold extension. Now, you end up noticing as soon as it ended up hitting that 78.6 level, the market ends up retracing back down, basically putting you at a position to where you end up having a low risk to high reward type of trade. It broke the B boundary, and then after that, as soon as it ended up hitting that negative 382 position, you can see that the price and people basically end up taking their sales and turning into buys, and from there you end up having this huge candlestick that happened right here within that moment. So people end up taking profit. You can see that the buyers end up controlling it for a little bit, and then after that it pushed back down and went down to a new lower low. But what it did was it completed this ABCD sequence of that Fibonacci move within that low. Now, what I'm going to end up talking about is our overall trading strategy and what we end up doing. And this is more of an invitation to be able to have you learn what we be able to do, what we do from an overall trading perspective, from a overall thought perspective on what we end up doing and how we go about each and every day for our overall trading strategy to be able to get this done. Now, our overall trading strategy is set up to be able to do this. You will learn how to accurately plot Fibonacci retracements and extensions on charts to determine the trading zone and the style of trading that is necessary to safely maximize profits while minimizing losses in our own trading style. What you'll end up receiving, what you'll end up learning from this overall trading strategy is a breakdown of the strategy, meaning that you'll end up receiving a ebook, basically breaking down each and every position, each and every trading strategy based off of the Fibonacci levels and everything else that you will need to know when it comes down to Fibonacci trading, including a web book that basically ends up having videos of each and every chapter with detailed explanations and examples that you can be able to learn from. You end up receiving a copy of our ranking system. And what I mean by the ranking system is, if you look at it, there are 28 different pairs in the Forex market. Now, you look at the stock market, there's over 10,000 different pairs that you can be able to look at, or 10,000 different stocks that you can be able to look at from a day-to-day basis. Because we're trading based off of currencies, we only look at the major and slight of the major and minor pairs that you can be able to look at and get an idea about where they're going for their overall movement. So by being able to use our strategy and break it down into 5 different types of trades that will make you more profitable than any other ones, then we can group each one of them pairs and figure out which ones are in the most optimal positions. And then when they're in the most optimal positions, we can only focus in on those trades to be able to give us a higher chance of being able to make profit within that range. You'll end up receiving ongoing mentorship, which means that you end up having 18 different classes that you'll end up going through with us, where we'll end up trading live together within the market. And that end up being 2 times out of the week. And also you will end up receiving a cheat sheet that basically ends up going over everything that we talked about in training and everything that we end up going through on Sunday mornings. Even if you're not inside of the classroom, you will end up receiving chart ideas. You will end up receiving videos that go along with it. You will end up receiving the actual ranking that goes along with that overall trade. And if there's any type of open trade that we're taking at that particular point, you'll end up seeing that actual trade that we end up deciding to do, whether if it's pending or active, and you can be able to see it all on that one chart and be able to follow along, even if you're not able to meet up with us. And then after that, you'll end up receiving discounts on future projects. Now, what I mean by that is this. Our newest project that we have for our automated trading system is our Synergy Automated Trading System. And what this does is it looks at overbought and oversold signals based off of the stochastic RSI, and it is optimized to be able to work for individualized trading pairs. So it works off of the market behavior of that pair and basically ends up finding overbought and oversold signals and gets you into the most optimal position to be able to get into. Now, this can be used as a swing trader, and it can be used as a position trader, because it goes after 200 to 300% on each and every trade, which allows you to be able to have different take profit types of schemes. If you want to use it based off of what you learned from the Fibonacci Fundamentals course and be able to only look at the extensions for its overall moves, then you can. But what happens is on this system is that it's already preset for as a overall percentage, so it allows you to be able to have a little bit more freedom. And it has deadly pinpoint entry areas for being able to get in. Now, if you want to be able to get a demo of the Synergy Auto, this includes one free, fully optimized set file that goes along with it. But you can be able to get it at a portion of what the price is going to actually be when we roll it out in March. And I can basically go over that in 1 second. Now, with all the stuff that I ended up talking about today, the Fibonacci Fundamentals course, the ongoing mentorship, the ranking system, the equity management sheets that you'll end up receiving to be able to make sure that you're placing yourself, that you're not overloading your account and everything else that you end up receiving. The classes that we end up having, the overall mentorship that you end up having, that has a $800 value or $799 value. Now, for a short time, because we're trying to fill up our seats and be able to get this rolling with everybody inside of the classroom to be able to meet and be able to fellowship all at once, we're doing it for a limited time offer of $500, being able to get that done. Now, if you have an interest in being able to get the free demo or get the demo of the Synergy Auto system, then that means that you'll end up paying the actual value of $799. Now, that is a steal compared to what we're actually going to end up rolling it out for in March and being able to get that. So you'll be the first person to be able to get your hands on it, to be able to try it out and see how that system actually works. Now, before we get out of here, because I know we got about a few more minutes before we leave out of here, I do not want the conversation to stop from just here. And being able to understand the reason why you're doing something is very important before you end up deciding what you're going to end up doing, or understanding what has to be done. When your why is more important than your what, then change actually happens. And just going back to what I end up saying in general, when I looked at my boys, when I end up figuring out that I end up getting let go from coaching, and I end up knowing that I had to be able to bring in at least 5 figures to be able to pay for the new home and everything else that I end up getting started, that we end up living in for, at that point in time, 1 year, and I knew that I had another son on the way, I had to be able to do something different. My education journey ended up starting off with me really literally paying almost $5,000 for the overall education to be able to learn some of the things that I'm teaching you to this day. And it was the best investment that I ended up making, because it basically felt like I was in college all over again, to be able to learn the things that I end up learning right now within this system. And basically what I'm trying to do is basically end up giving that same type of feel, but being able to do it for people that, if you're really trying to dip your toe in the water and understand how to be able to trade and everything else like that, you're not bombarded with that overall amount of being able to start off with it. So, going back to what I end up saying, I don't want the conversation to stop here. If you're interested in being able to join us in our Carter Cal Academy group, you can go to facebook.com /Carter Cal Capital Inc. and then take you to our Carter Cal Academy. All you got to do is just sign up. We have free webinars that we actually end up going through, which are pre-recorded videos 2 times out of the week. Follow us on Twitter, Carter Cal Cap, YouTube, where we end up posting out videos 2 times a week as well, where we end up talking about different information that you end up learning from Carter Cal Cap, and Instagram to basically end up looking at some of our funny pictures and some of the of our results that we end up having. But if you're interested in being able to get started with us and join the course that we actually have, we have 25 seats that we end up starting off with. We actually end up we have 9 people that have already got started with us, so we're getting close to our overall number of being able to fill out them seats. I'm really excited for the people that are looking to be able to get started with us. But if you want to go ahead and look at that package a little bit more, or even pay for the package now to be able to get started, you can go to cartercalcapital.com /Fibonacci Fundamentals, and you can be able to learn a little bit more from there, see some of the promo videos, and actually be able to get started on that page. Now, before I leave, I want to end up saying, one, thank you for your time. Thank you for sitting down here with me. We actually end up getting done with this a little bit faster than what I actually expected. Typically, I get done with everything within 40 to 45 minutes. But even with that said, like I ended up saying before, I don't want the conversation to stop there. I don't want you to sit up there and look at price and make that be a hindrance in what you're trying to do for your overall financial goals. Understand this: when your why is more important than your what, once again, then change actually happens. If you're interested in being able to learn a little bit more about our automated systems that we have going on, whether if it's the Pathfinder Auto system, which we basically end up finishing up with our first class, where we end up bringing in over 1,800 pips of overall pro profit for our customers, and what we have going on upcoming in March, which will end up being the Synergy Auto. Please make sure that you end up sending me a message as well, and I'll be able to take the time to be able to show you exactly how that works, and we'll do that in a private session. But until then, thank you for your time. Thank you for being patient with me. Thank you for listening to everything that we had to offer. Hopefully, we can be able to see some of y'all in the classroom when we end up getting started. And like always, plan your trade, trade your plan. And everyone, y'all end up having a good one.